Good morning and welcome everyone to another recorded segment of financial information from Lendonia. Turns out that after the last segment, a lot of you are considering taking advantage of the record low interest rates and you are getting ready to refinance or purchase a property. Hence, when I made a statement on the last recording that banks have tightened the underwriting guidelines, I received a lot of questions from you and requests to be more specific. As you may imagine, a lot of factors play an important role in the bank approving your mortgage, and they have to do with the intent of using the property as either owner-occupied or an investment. These factors have to do with your credit history, with the proportion of your liabilities to your income, with the type of income you're generating, whether you own your own business or you work for a company, if you're getting paid a salary, hourly, commissions, bonuses, etc. It is impossible in a 2-3 minute recording segment to answer the questions regarding each of these factors and the changes, so please call me with super specific questions. Now, I want to focus on one factor that is gaining importance over the past several weeks, and that is the factor of financial reserves. And the way the bank defines financial reserves, it's simply an equivalent of your anticipated mortgage payments, including taxes and insurance, that remains in your bank account after you close your mortgage. So in a nutshell, you just closed your loan, so you paid your down payment, your closing costs, and the question is simply how many months of mortgage payments are left in your bank. If your anticipated mortgage payment is $2,000 and you have $12,000 in the bank, you do have 6 months reserves. Now, are we saying that getting a mortgage approved with zero reserves is not possible? No, that is not what's going out there. It's still possible to get certain mortgages approved with no reserves. However, the predominant direction the banks are going is to require those reserves, require a specific number of months of these reserves, depending how far away you strive from being this perfect client that the borrower envisions, a client with that's purchasing an owner-occupied property with a large down payment, perfect credit, perfect income, and so on and so forth. The farther you are from that ideal, it is to be expected that the lender will require you to have a specific number of months reserves. So if you do have specific questions, please email me, call me. I'll be more than happy to answer those. Speaking of questions, there is another series of questions I received regarding filing for unemployment, and due to the sheer number of those requests, I will do a segment in the next day or two, and I promise to guide you through all the nuances of filing for unemployment and filing in a way that assures us a positive outcome. Until then, thank you so very much for following our Facebook, sharing with your friends. Until our next segment, stay healthy, stay safe.